Hello everyone. I would like to give an update on our views on the market and some recent financial market developments. One of the topics that has been discussed quite rigorously in the last few days is the rise in bond yields across the globe. A lot of investors are worried about its impact on the equity markets. Well, such kind of rise in global yields is quite normal at this stage of the recovery. As market participants get confidence about the sustainability of economic growth, we see an improvement in inflation expectations and we see an uptick in bond yields. The longer end bond yields typically reflect this sentiment of the market. The economic recovery has been quite strong, and that is reflected in other lead indicators also. Like the metals market, like the commodities market have also moved up. We've seen improvement in the copper to gold ratio. In the bond markets, we've seen an improvement in the emerging market spreads to developed market rates. Typically, these conditions are favorable for emerging markets as well as cyclical sectors. Globally, we are also seeing a rise in earnings revision. There are more upgrades than downgrades globally. In India too, we've seen the Nifty EPS revised significantly upward through the year. Last May, during lockdowns, we were worried whether FY21 would see zero or negative earnings for the Nifty companies. Right now, after several upgrades, we are standing at about 20% growth for FY21 in Nifty. This upgrade has been driven by many factors: the rapid pace of economic recovery, the good cost management by companies, and also increased contribution from cyclical sectors like materials, financials, and industrials. The second topic of discussion has been the capex story in the country. As economic recovery gains pace, the capacity utilization has moved up significantly. Many industries are looking to do further capex or expand their facilities for growth. The government has also provided a lot of incentives under the Atmanirbhar program or Make in India program, where tax cuts as well as production-linked incentives are provided to increase manufacturing in the country. In the budget too, the government has given a growth narrative. Like the Keynesian multiplier, which says that as the government spends, it leads to a multiplier effect in the economy, this narrative will lead to a confidence multiplier within businesses. Today, capital markets are buoyant. A lot of money is coming from foreign investors through FDI, as well as banks are looking to grow credit. So for good projects, the financing or the liquidity side is also quite comfortable. In the Indian market, the investors have seen a lot of false dawns about the capex story in the last 1 decade. And hence, it is natural to expect some skepticism regarding this story. However, there are green shoots available which are seen across industries. Order books of construction and engineering companies have moved up, and we believe the path for manufacturing growth in the country is quite visible and it's quite strong. The third important topic is, of course, the positive news of COVID vaccination. The government has rolled out the vaccination program very well. We are at a good pace vaccinating senior citizens and the vulnerable segments of the society, people with comorbidity. Soon, hopefully, we will be at a program where all the adults in the country are vaccinated. While there has been some rise in COVID cases in the past few weeks, and there are chances of some kind of lockdowns or restrictions coming in certain parts of the country, these will not be as severe as what we have seen in the past, and I don't believe that they will affect the recovery pace of the economy. Now, coming to the outlook, I would like to reiterate the 4 themes that I spoke about the last time: the return of inflation, rural growth, the resurgence in manufacturing, and the rise of housing. These themes have a good tailwind for the next few years, and companies that form within these themes will see a good earnings growth going forward. Regarding valuations, Nifty is trading at about 18 times FY23 after upgrades. There are some stocks and sectors where valuations have moved to fair value zones or even beyond. But in the broader market, there are opportunities available to pick value to growth metrics in mid caps and small caps. In terms of sectors, cyclicals offer opportunities where you can pick up companies and stocks which have either growth being underappreciated or valuations that deserve a re-rating. Of course, corrections are part of a bull market and they can come anytime. It is difficult to time a correction. However, for a long-term investor who's a patient investor, these corrections provide an opportunity to build wealth, to increase allocations towards equities. Thank you very much and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.